In this video, I'm going to show you a trading strategy which works on the 4-hour chart and which has been working since 2008. I developed this strategy myself and then I documented the process, and then I made 3 videos which I posted here on YouTube back in February 2019, almost 5 years ago. Since the release of those 3 videos, the strategy has gone on to perform pretty well, and here's what the equity graph looks like. So first off, I'll show you the exact rules to trade the strategy so that you can steal it and trade it yourself. Then I'll briefly talk about how I developed it in the first place, and then we'll review the performance since I first created it. And finally, I'll explain why I neglected to actually trade this strategy myself, leaving a lot of profit on the table. When creating these algorithmic or rule-based trading strategies, I actually end up only trading a very small percentage of them. Most of them don't actually meet my performance criteria, and I only trade the ones which I'm most happy with in testing. But even then, even some of those which I am most happy with can still underperform compared to my expectations and what the backtest shows. But this strategy, which I'm going to show you today, is quite the opposite. I wasn't happy with it when I'd done the testing and the development, and for that reason I didn't trade it. But I really wish I did. As you just saw by the equity curve, this strategy, since development almost 5 years ago, has gone on to produce some pretty consistent profits. So, how does this strategy work? Let me show you all of the rules. This strategy works on dollar yen, and we're going to be looking at the 4-hour chart. So looking at the trade entries, let's look at a long trade first. If we get an outside bar on that 4-hour chart, and that outside bar is all greater than the 30 period exponential moving average, then that's the first condition. And we want to see the close of the outside bar greater than the open. When we get those conditions, we buy the next bar at market. We'll have a look at these examples on the chart in just a moment. The opposite rules for short entries. If there's an outside bar, but this time that outside bar has to be below the 30 period exponential moving average, and the close has to be less than the open, and then we short next bar at market. We do have some trade filters which I introduced later on in the development, and that's what worked best, so I'm going to give those to you now. We only go long if the high of today so far is greater than yesterday's high, and we only go short if the low of today so far is less than the low of yesterday. So prices have already broken either above yesterday's high or below yesterday's low. And then finally we have a time window. I'm going to show you the exact best time of the day to take these trades. We don't want to be taking every trade when they come along. Trade exits, number 1, we've got a stop and reverse, which rarely happens with this strategy. More often than not, we're getting out with a stop loss or a profit target. But the stop and reverse simply means that if we're in a long trade, for example, and we haven't hit a stop loss and we haven't hit the profit target, but we see the conditions to go into a short trade, we then exit the long trade and we enter a new short trade. We have a stop loss, which the best was 150 pips, profit target best was 350 pips. And then I actually tested an optional end of day exit, which didn't work particularly well. So the best results we're going to see didn't use that end of day exit. Here's an example. So we're looking at the 4-hour chart. We've got our 30 period exponential moving average here, and we want to see the outside bar, which means that the high of this bar is greater than the high of the previous bar, the low of this bar is less than the low of the previous bar. All of the price is outside of that previous bar. That's our first condition. The next condition is that the close is greater than the open, so we have a green bar. Okay. Once we get all those conditions, we buy next bar at the open. And the opposite you saw was for short trades. Again, we need to see an outside bar, but the complete bar has to be below the moving average, and we want to see a red bar. We want to see the open greater than the close. And when we see that, we short next bar at open. So pretty simple to spot on the chart, pretty easy to trade. I originally made 3 videos showing you the stages of this development back in 2019. Of course, I'll leave the links to those videos for those of you who are interested. In video 1, I showed you the rules to the strategy. I then did some initial testing on data from January 2008 to January 2017. So that left me 2 years from January 2017 to Jan 19 of out of sample or unseen data. Once the strategy was then developed on the in-sample data, I could then run it on that 2 years of out-of-sample data to see if the results matched up to the in-sample. I first tested the strategy just with a 100 pip stop loss and a 100 pip profit target, and the results were pretty bad. I then looked at a time window where we could take the trades. I found that only taking trades from midnight to 1700 Eastern Standard Time worked the best, but the results were still bad. Next was video 2, where I looked more into that stop loss and the profit target. And I changed the stop loss from 100 to 150 pips, and the profit target went up to 350 pips. The results were better, but they still weren't pretty good. After that, I also wanted to test making this strategy a day trading strategy, and I did that by exiting all of trades at the end of the session at 1700 Eastern Standard Time. This sometimes can improve strategies, but in the case of this strategy, I did that and the results were still bad. In the final video is where the results for this strategy improved the most. I reduced that trading window from 2 AM to 10 AM, and then I added the filters, which I explained in the slides earlier. I then ran the backtest and the results were best yet. However, as I had really kind of forced this strategy to work from the beginning, I wasn't all that confident that the results would be as good as the backtest when I come to test that last 2 years worth of out of sample data. And sure enough, when I applied the strategy to that extra 2 years of unseen or out of sample data, the results were pretty awful. If I hadn't already, by that time, made my mind up whether I was going to trade this live, that was the time when I decided that this definitely wouldn't be traded live. But fast forward almost 5 years to today, and the results are completely different. As we will see next, this strategy has been working pretty decently over that almost 5 years of true unseen data since the strategy was originally developed and I released that video. A strategy which would have made me money if I had traded it after all. Let me show you. I've got the original workspace in which I developed the strategy and which you saw in the first video open. But we're going to look at 4 workspaces, and they're all exactly the same strategy but just different date ranges, and I'll show you as we move through them. The first date range, what we've got here, is from January 2008 through to January 2017. Now this is the complete in-sample data which I used to develop the strategy originally. Now, as I said in the original video, notice that this is actually running on a 10-minute chart, but we have got a second data set down the bottom here, which is a 240 or 4-hour chart. Don't get confused, don't think I'm running the strategy on a 10-minute chart. I'm just doing it in MultiCharts. It just allows me to get better definition. The strategy works off the 4-hour chart like we saw in the rules. So if we look at the performance report, that's what the equity curve looks like, and that's what the equity curve of the final strategy once I'd finished the development looked like, which is okay. It's not that great, is it? But it's the best using the different values which I came up with. Next, I then ran it on 2 years worth of out of sample data, which I had at the time of testing, but I hadn't used to run the development. So in the next workspace, the data I have is from January 2008, this time, through to February 2019. So we've got 2 years and 1 month of out of sample data added on to the end of this strategy. So let's look at the report for this. And here's where we see that the performance and the out of sample period just went downhill immediately. If we look, whereabouts was the high was in January 2017, and that was the data which we'd been using to develop the strategy. As soon as we went into out of sample data, the strategy just started making losses after losses. It performed very badly in out of sample data. This is when I decided, or I'd probably decided before this, that I wasn't happy with the strategy. And this is pretty much where we got up to in that 3-part video series. This is where I left off. When I came back to review the strategy, some almost 5 years later, you'll see the results in this workspace. Now I've got data from January 2008 through to January 2024, right up until the day I'm filming this video. So we've got from February 2019 through to January 2024, where we haven't seen any of the results yet. And that's what the results look like. So remember, with this first period here, this uptrend was when we were using the in-sample data. Then we saw a bad period of out-of-sample data, and then from about February, which is about here, we've got this next set of almost 5 years of data where the performance has reversed and it's gone back to making money again. You can imagine I was actually very surprised when I saw these results. And I'll just show you in detail this last period. If we go to the last workspace, where we've got data from the 1st of February 2019, around about when I released the videos, through to 1st of January 2024. So this is the true out of sample data. This is the future data. This is what it would have looked like had I been, or had you been, trading the strategy. And it's pretty good, isn't it? The green dots represent new highs in equity, and we've made new highs right up until about October, a couple of months ago in 2023. And it looks like the projection is this strategy is still working and certainly could continue to make more money. We'll just have a look at the average trade value. We've got an average trade of 41,000 yen, that's 41 pips, which is a really large average trade value. So by the time we've taken out some costs for this, we've still got a very large average trade and a really good edge in this strategy. Trading one full lot, this strategy in that time period has made 1.8 million yen. Finally, let's just look at the annual performance, and we can see, apart from 2019, which was a bit shaky, each year since then has made money. If you're struggling to find rule-based trading strategies like we've been looking at, then you can download my 22-page Beat the Market Strategy Guidebook. In the guidebook, I share with you the full rules for 3 more rule-based or algorithmic trading strategies which have been working pretty well. And at the moment, if you find the link down in the description, then you can get it completely free. Alternatively, if you enroll in my popular trading course, you'll find another 6 trading strategies, and I'll show you the best way to trade them so that we can maximize the profits while keeping the risk as low as possible. You can find out more information about how that will benefit you, also if you find the link down in the description. Concluding the review of this old strategy, we can see that although the strategy didn't perform very well in that initial 2 years worth of out of sample data, which can be a really good indication of how it's going to do in years to come, we saw that after that 2 years, we've seen almost 5 years was actually done pretty well. So why is that? Why did the out of sample data test pretty badly, but then performance then turned right round again and it started making money for another 5 years? If I'm completely honest, I don't know. Perhaps I didn't do too bad a job of the development in the first place, and during that 2 years of out of sample testing, dollar yen just started behaving a little bit differently to the rest of the backtest, but then returned to its original kind of movement and behaviour for the next 5 years, and that's why we saw performance pick back up. But I didn't like the strategy from the start of the development. As we went through the development stages of changing the inputs and introducing filters, I felt like I was forcing the strategy to work. It really felt like I was over-optimizing. And that's why I didn't trade it live, and that's why I wasn't at all surprised when it failed that first initial 2 years worth of out of sample testing. The fact that it's gone on and performed pretty well in those next 5 years is definitely a surprise. A strategy which would have made money had I continued trading it, and it quite possibly will continue to make money into the future. That being said, I didn't do anything wrong by neglecting to trade the strategy, apart from leave a load of money on the table. The fact is, after the development process, the strategy didn't pass my testing criteria, so I couldn't go on and trade it. They're my rules. It's all part of the development process, and you win some and you lose some. Our job is to win a lot more than what we lose. Well, that's it for today. That's it for this video. I hope you find the video interesting. I certainly did when I checked back at the performance of this strategy over the last 5 years. And thanks for staying right till the end of the video. If you have enjoyed it, then please give the video a thumbs up. I expect I'll do some more of these strategy review videos of strategies which I've created and published on YouTube over the past years. That will bring to light any of the strategies which have been performing well, and that gives you the opportunity to steal any of these strategies which you like and you think might make you some money. Well, I hope to see you in the next video, but until then, this is Jared Goodwin, and thank you.